Chivas, we are live. Hopefully I didn't start talking too soon there. Thank you so much for joining me so that we can have episode 4 of the Reddit FundriseInvestors podcast, episode 4. I'm very excited about this, and I've been looking forward to it for a long time.
Happy to be here. Happy to be here. Thanks for having me.
I appreciate it. So do you want me to kind of get into an introduction about how we know each other and how we got here, or do you want to kick that off?
No, you go ahead. You give us a little bit of background, and then I'll follow up with it.
Sounds good. So as far as I can recall off the top of my head, our history goes back to 2009-10 timeframe when we were both in Naval Mobile Construction Battalion 74, Gulfport, Mississippi. We did, you and I did a deployment to Afghanistan together, 2009-10 timeframe. And then we saw each other randomly in Suda Bay, Crete, Greece, at a Naval Air Station, Suda Bay, when we were no longer in the same unit together. And then I want to say almost a year ago, we reconnected, probably through LinkedIn.
Right.
And we met at Pensacola. How does that check with your memory?
Yep, it's pretty accurate. When we were in Afghanistan, I was in Barley Company. Where were you? Were you in
Charlie? Yeah.
Yeah. So you were all So I knew you was around, but I didn't see you as much because you was kind of floating, and then I was always back and forth between FOBs. But I didn't know if you were part of Barley or if you were part of Ops, because every time I saw you, you were like tagging along with S3 and S3 Charlie.
Yeah, that's interesting. I was mostly with Charlie Bravo Company. We kind of combine them on deployment, right? And then I was also the S6 with communication guys, ITs and ETs.
Yep.
And then a little bit with the Armory. But I was at main body the entire deployment. I made one trip one day to FOB Dwyer. Yeah. So I was one of the guys that they refer to as a FOB, I suppose.
Yeah. So I went to Dwyer 3 times for that deployment, going back and forth for civil engineer, road construction type of stuff. But and then it just so happened, I want to say last year I was taking a networking course, I was in a networking webinar on how to build your network. And it was specifically for a military. And it says, hey, if you're those type of, what did they say? If you're those type of Hollywood military whatevers that do cruise books or scrap books at the end of every deployment, go through your book and then reach out to people that you think would connect. So I have our cruise book from Afghanistan, and I was just going through, and I'm like, okay, who would respond if I clicked it? And then it is, okay, who's on LinkedIn? You'd be surprised how many people are just not on LinkedIn, and especially in the military, because we don't really, when you're active duty, you don't need LinkedIn. You need, fleet temps. That's how everybody finds everybody, right?
Sure.
So then I think you are one of 5 officers that have responded. All the COs that I've reached out to, I think it's like a formality. Like if you reach out to them, they'll respond and then they'll have a conversation with you. But as far as JGs and ensigns, I think you're I don't know if you remember, I think his name is Mike Williams. And then there's another guy who's really into real estate right now. I can't think of his name, but I was surprised you actually were still in the South, to be honest with you.
Yeah.
Because when I met you, when we caught up, when we ran into each other in Suda Bay, you seemed to have like a forward plan of what you wanted to do, and none of it had to deal with staying in the South. So I was like, that's good for him. Good for him. And then when you said you've got property in Mississippi and you're in Pensacola, and I was like, that's not Italy. It's nowhere near Italy. So I'm glad you made the connection and we got to reconnect. It's been fun because you actually caught me at the right time of where I was in the process of evaluating different investment vehicles and what I wanted to fit, my family now, long-term and generationally. And I was going through this process of kind of self-teaching myself this journey of just increasing my financial literacy. So when you connected, I had actually just come off of a 12-month experiment with CDs, where I had a couple CDs in place just to see what they do. It wasn't like, I don't put a lot of money in the experiments, maybe no more than $100, mainly because I want to see the actual numbers when it comes to like taxes, and then the APYs, and then the APRs and things like that. So when I was done with that, and then you were like, hey, I'm with Fundrise, and this is what it is. I had to tell you, like that first conversation, I was like, I don't know what he's talking about, but I need a real estate investment without having to invest in real estate. So it was either get a publicly traded REIT, or I'll just, you're talking about this. You spoke with conviction. You were very persistent. I'm like, all right, he's going to give me $100 from his connection. So what's a free $100, right? So I went ahead and then went to it. And then, from there, my process is, once I have it, now I should have access to exactly what it is. And then I can start doing my research on what is Fundrise and what do I want Fundrise to be for me. So, I mean, your timing was just, it was just spot on.
I love that. You refreshed my memory about several things that weren't up top of the mind for me when we were talking, but some things that really registered with me that you said was what Fundrise does is gives you exposure to real estate, residential real estate, both single family and multifamily, without having to be a landlord.
Right.
And I'm currently sitting in the first house I bought at my first duty station in Pensacola, and I bought this house in 2005. And when I moved out, actually to go down the street to Gulfport, Mississippi, to join NMCB 74 with you, I thought that I was going to sell this house when I bought it, when I moved, and I've owned it for 20 years now. Almost 20 years in a couple months. And it really has not been front of mind for me in those 20 years until very recently, and it's turned into a nightmare because the last person renting this smoked cigarettes heavily in this property, and boy, did he do a lot of damage. A lot of other things are going on in my life, and I just have learned in a short period of time how painful it can be to be a landlord.
Right.
And when you and I were talking last summer, about a year ago, when we first reconnected, I had cashed out all the equity in this rental property and another rental property I have, and I thought I was going to buy more of them. And that was before I discovered this nightmare that this property was in. And I decided, instead of buying more rental properties, to invest that on Fundrise, and I'm so happy that I did, so that I can leave all the headaches, the heartaches, and the backaches to Fundrise with managing rental properties, because this has just been, like I said, a nightmare. It's not an overstatement. But the other thing that you said, if I can recall, I know what it is. It has to do with you accepting my invitation to join Fundrise. At last time I checked with Fundrise, I had 92 referrals, invitations, and that was at the kind of a month ago when I checked. I wouldn't be surprised if I'm up over 100 or close to it. And they're all very different. And something that's been very challenging for me to accept with the people who know me, like my close friends and my close family, who don't accept my invitation, I really take that personally. And I'm not saying that I should, and I don't think that that's healthy, but it's true. And because like you said, I'm not asking people to start investing on this platform. I'm asking people to accept a gift I have to offer. And when they don't accept the gift and they know me, I take that very personally. But that was not the case with you. You and I were work colleagues, and you don't know me as well as my closest friends and family, and yet you accepted the invitation. And so I kind of have to balance that. Of the 100 people or so who've accepted my invitation, I've never met or talked to many of them. They're just people on the internet who've seen my posts, and they accept the invitation, and they never contact me. And so, when I think about what you said, you as an invitation, it just kind of helped me put into perspective. You're somewhere in between the people who I never meet and my closest friends and family who don't accept the invitation, and you did that. And I really appreciate that, and I appreciate that you came over to Pensacola and we had dinner with your family and we talked about Fundrise and we just talked about life and deployments. And yeah, I'm really fired up about this. And I don't know whose idea it was. I wouldn't be surprised if it was yours that we do this. But I have my officer candidate school roommate, one of my roommates, who is currently sitting in the office that I kind of retired from in Italy. And we're going to do what you and I are doing, depending on how well this goes, for like episode 5. And you kind of gave me the idea. So thank you very much for that.
No, absolutely. It's my pleasure. Because what you're doing is beneficial for those who are interested in. It's just you don't know who's ready to accept that information or not. Because you're at a point to where you're like a parent. Like you're like a parent who's found a great way to be successful. But then you have this child who's 9 and they're just not ready for success. They don't even want to hear about it. So you just kind of got to hold on to it, but you're so anxious to say, hey, I just need you to just understand this is what you can do. And they're like, sure, whatever, Dad. I just want to go. Like, so like out of the 92 people that you're talking with, especially active duty, I mean, I can't tell you how many active duty people who are so comfortable with that job security and that steady paycheck. Investing is not something that is like on the forefront of your mind because we have so many other things going on. And unless there's the few that are like, okay, I knew I got to be, conscious of this. But I'm speaking about myself. Like I didn't even pay into TSP. By the time TSP came out, I had already had investment. Well, I had what I thought was an IRA from A school, which I want to say at my 8-year mark, I got a letter from a lawyer saying that company went bankrupt, and it turned out to just be a mutual fund or some kind of way. It went from a retirement account to a mutual fund, and then I think I got like 60% of the money I put in it back. So then like 2 years later, TSP came out, and I was kind of burnt out with investing altogether. So I'm like, now I'm just going to keep my money. And then, if I survive to 20, because nobody thinks you're going to make it to 20 years. If I survive till 20, then I'll figure it out then. But no, and I understand your frustrations because like I told you, so when I retired in 19 before COVID hit, I was already in retirement mode. So COVID was perfect for me because I was already home. But then I went on this journey to increase my financial literacy, and I'm learning more and more about just getting smart about money, not to be confused with getting smart about making money. Those are two completely different goals. I wanted to get smarter about money. And then as I'm learning things, I'm talking to my mother, my father, my brothers. They know me, they know my process, but even them got to a point to where they're like, well, why should I believe you? And I'm like, who the fuck are you talking to? Are you serious? I take did you just ask, like, you just challenged, like, do you know who I, you know me all, I've known you all your life, and you're asking me what, like, I understand how you can take it personally. Like, you act like you don't know me, but then at some point when it comes to finances, people want to know, what's your background, what's your credentials, or the proof is in the pudding. So your transparency, which was attractive to me when you started talking about it. Right after that, you're like, hey, here's what I got into it. And I was like, yo, you is your social security frozen? Is this locked? Because you're just throwing this out here. And I'm like, but then I got a chance to like look at it and then look at the numbers and then say, okay, this looks good, but do I want to get invested? Like I went through the process of evaluating, what do I want from it and if I want it at all. And it just so happened that I realized real estate, if you do any type of financial research, you'll realize, at least in America, real estate is like in the top 3 of the best ways to gain financial independence. Has been since, I want to say, the 1800s, right? But when I was talking to what do they call it? Realtors, and then real estate brokers, or what's the multi-unit real estate people? They got a title for them. I can't think of it off the top of my head. But their mindset is not one that I espouse because I'm more of an environmentalist. So I remember, where was I? I think I was at the library just here in Mississippi, and I was talking to a real estate investor, and he would see like open forest, and then his mind goes to how many pieces of property can I get in that forest? Where I see open forest, and I'm like, how much natural capital can we gain or can we capture for preserving our planet? Like, that's kind of how I want my mindset to be. So then it became, how can I invest in real estate while still preserving the planet and not trying to build houses anywhere and everywhere on every piece of land? And then so right before I met you, I had put stocks into like just a REIT ETF, just a random one that I got from personal finance website. I wasn't doing anything. So I was like, okay, this has got to happen for a reason. There's no way this level of investment comes from just out of the blue. I've never heard of Fundrise, never paid attention to a commercial, didn't know anything about it, but it's exactly what I want. It gives me an opportunity to invest in real estate, to see the real estate that I'm invested in. I can go visit it through the information that I ask you, like, hey, have you seen this? Have you been here? And you're like, no, go to the website. It's right here. You can literally go drive over there if you want to. But then I don't have to change my mindset. I can just kind of support from afar and then get all the newsletters. So it fit the opportunity for me to give it a probationary try to see what I want from it.
Yeah, man. Some of the things that you're saying are music to my ears, especially your vignette about your family members kind of like calling you out on whether or not they should trust you. And you know, the thing this tough lesson that I have to learn over and over again is there's, you know, I'm going to use the title of a book by Morgan Housel called The Psychology of Money.
I got that.
It's a good book. He just came out with a new book. I forget what it's called, but I listened to that a while ago. And one thing that I really took away from it is that everybody has kind of like their own unique fingerprint as it relates to money, how they think and feel about money, based on, you know, their unique experiences and thoughts and feelings with money. And that is something that you have to respect and overcome potentially. And, you know, what's not fun is feeling like your friends and family think you're a snake oil salesman. It's not a fun feeling. But I also understand that it's just something that I have to deal with. It's something that I have kind of accepted, even though it's prickly at times. It's, you know, it's kind of my burden to bear that I signed up for. I picked my poison, if you will. And the thing is, what I'm trying to do is plant seeds, because the way I discovered Fundrise was not intentionally. It was the last year I was in the Navy, and I realized, oh my goodness, I got to get my ducks in a row, because my time here is coming to an end, and I got to figure out what I'm going to do financially. And so I was scouring the internet to be much more active with investing. I've always been investment minded, financially conservative, but it went from having a back seat to a front seat in my life. And I was really paying a lot of attention to YouTube, and a guy that I was following at the time, his name's Justin O. He was sponsored by Fundrise. And because I had a lot of respect and admiration for what Justin O was doing, I created an account. You know, I guess maybe Justin got a referral probably when I signed up. But, you know, my account started with $0. I didn't have a $100 invitation referral voucher. And I was putting $10 a week, a month into it for something like 8 or 9 months until I cashed out that equity in my rental properties. And around October of 2022, I want to say, Yep. So I heard my first episode of the Fundrise podcast, which is called Onward. It was episode 10, and it was Fundrise's outlook for the market. I wish I could actually remember the exact name of the title, but I was blown away by it. I was really impressed. I remember where I was, and I was actually in my father's apartment complex at the time, walking around for exercise and listening to it, and I was blown away by it. At the time, it was Ben and Cardiff Garcia, I call him his co-host, although Cardiff has his own podcast and business that he focuses on. And I learned a term that Ben introduced me to called turtles all the way down. And it refers to how one institution's asset is another borrower or institution's debt. And I'm not going to try and explain it as good as Ben did, but it really opened up my mind to the concept of, okay, well, where does the buck stop with all this borrowing on a national level, right? For an entire country's worth of borrowing and big financial institutions. Well, that was episode 10. And as soon as I listened to that, I listened to 1 through 9. And here we are, a total of 46 episodes later. And I started consuming everything that I could consume. That Ben's interviews off of Onward. He's got a TED Talk. And what he was saying and how he's saying it spoke to me. It speaks to me. And I he uses terms like fundrise is the tortoise, not the hare, and other, kind of analogies that you can think of, like the fire ant, not the grasshopper, right? Just conservative, steady, stable, slow and steady returns that you would think, if people know you and trust you, would be right up their alley if they are conservative. But again, it goes back to, that financial fingerprint where everybody's different. Anyway, listening to Onward really, and everything else I could find from the CEO, Ben Miller, convinced me to actually, for me, put a lot of money to work all at once, which was, scary is a word, but it was also, high stakes. And that was 2 years ago. That was around February, March of 2023. And boy, am I happy with what I did. Could I have done better? Absolutely. Around that time, Facebook's parent company Meta was trading at $88 a share. Would I be better off if I put all of the equity that I cashed out of my rental properties in Meta? Absolutely. It would have something like 5x between now and then. But what I didn't have? The courage and conviction to do that I gained from listening to Ben Miller and reading everything that's in the Fundrise Education Center. And so what I could have done really doesn't compare to what I did do, philosophically speaking. So you woulda, shoulda, coulda. I can do that all I want, but yeah. So why do I put my financial private information out there for all of God and country to see? To follow in the footsteps of some of these people that I hold in high regard. Keith Gill, the guy who was Roaring Kitty, DFV. He kind of set that standard for me in my personal experience of watching people online. Guy named Joseph Carlson. He's a YouTuber, a financial influencer. He's got 2 very public stock portfolios that he posts on a weekly basis and tracks with some very high dollar amounts. And I respect the transparency that the CEO Ben Miller displays on Reddit and Twitter and LinkedIn. And so what I do with posting my public portfolio, which, by the way, I started out as an avatar and a username on Reddit. And now I've got my face and my name plastered all over the place because I'm trying to build that trust and transparency through letting my portfolio performance speak for itself. And the thing that kind of stinks, just to tie a bow on this, is when it doesn't matter to people who know me. They don't care. They don't care that they saw my portfolio 2 years ago, half of what it is today. I'm talking about my Fundrise portfolio. And so, that is what it is. And some of these people I talked to for years, and then they finally sign up. My grandmother, by marriage, she hasn't signed up. And it's like, okay, Grandma. I just got to swallow. I got to swallow that bitter pill every time I think about it. But I'll go on and on about this. So let me ask you, what has your experience been? If you can kind of think about from initially signing up. I remember you checked the Better Business Bureau, which you introduced me to that idea. By the way, I had never thought of checking the Better Business Bureau for Fundrise, and so I appreciated that you introduced me to that. What's your experience been like?
So yes, that's true. I didn't know anything about Fundrise. So there's a couple of websites that I've learned for background, I will be going into my senior year of my undergrad program now. So through just the academic process, especially now, they give you the techniques on how to validate, websites and then scholarly sources and, stuff like that. But it's updated probably from, when you went through your college your days. So I just took what they have taught me in school and was like, okay, you want me to go to Fundrise? Fundrise is a website. The two main key points of validating a website is, one, Google them. Let's see what Google says about them, for one. And it's going to take you to Wikipedia. Now, Wikipedia is not the end all be all. It's just a portion to guide you in the right direction. So from there, I go to Wikipedia. We can actually walk through it, to be honest with you. Wikipedia tells me who's the CEO, what the company's about, gives me just basic information. So from there, I go to look up the CEO. Who is the CEO? What's the CEO is about? Is he, I've been to so many different websites where the CEO is the stand-up comedian who's just doing this for fun, but the website makes it seem like it's something else. Well, that's a red flag.
Okay.
You know what I'm saying? So I go to Fundrise, CEO checks out, company checks out. It's a company. So let me see what Better Business Bureau says about it. And understand that when I go to Better Business Bureau, I'm expecting to see negativity. Like, that's kind of what they're known for. Like, somebody's there complaining. But for us doing construction, we kind of know what customer service reviews allude to, and then how very biased and ignorant they can be. When I've been a part of projects where we've, constructed a $500,000 facility, but the owner is pissed off because the light cover in this one room is cracked. So now he doesn't want the whole building because of this one light cover. And now he's got a 4-page, 1-star review about the entire process because of this one light cover that I could probably, I have a light cover in my cargo pocket. I can replace it if I want to, right? So I go to Better Business Bureau, and I'm looking at what are the complaints, what is Fundrise response to the complaints.
Yeah.
And at the time, the first 5 complaints was all the same. I requested to get my money because I needed money like now, and it took 3 months for my money to get here. I don't like that. I'm like, okay, there's so the process is, okay, you requested money, but the money didn't happen. And then when you read Fundrise's response, they literally copy and paste the instruction or the regulation in their doctrine that says, hey, we only cash out this many times a year. So whenever you request it, this is when you would expect it. You're not going to expect it in 2 to 3 business days, things of that nature. Right. So I'm like, okay. So what I interpreted was, when I put my money in here, I really can't touch it. And that, for me, that's what I'm looking for. I need investment vehicles that I know will get penalized if I take money out, because I'm an American and I'm trained to spend money, because that's the way America sets up. If I get $100 right now, it's going to burn a hole in my pocket. I'm probably going to go to the snowball stand with my daughter and blow $100 on snowballs and cheeseburgers, because that's the way my mind thinks. Sure. Now, if I sit on it for like a night or two, then I'm like, let me take $50 and put it someplace to grow, and then I'll take $50 and go have fun. Yeah. Right. But what I also learned, which I think it's kind of what causes the ambivalence of you building a brand, is as many people that I've seen that share their portfolio, they always show the disclaimer, or they always say the disclaimer, hey, this isn't me bragging. I'm just trying to show you what it could be, right? Because you're not bragging, but so some other people is like, he's bragging, but you're really not. Like, it's like, hey, this is what it is right now, and this is what it could be. Go ahead.
No, I completely agree with you. It's kind of a balancing act. It's a fine line, because money is so personal and can be emotional, and people have lots of thoughts and feelings about it. It's kind of like, I remember when I switched from Reddit, from whatever avatar I had to my face, and some of the people commented that they appreciated that. Now they're not doing it. They're still comfortably hiding behind their avatar and their username. And so the point is, you have to put yourself out there. If you want to be trusted, if you want people to feel that you're transparent, you got to open kimono, right? Right. You got to kind of, and that's not comfortable. And I kind of did it slowly over time. And I got to the point where I think I was motivated by the frustration that I saw. I'm not sure if you're familiar with the term brigading, but it's a term I learned from Reddit, where I could tell that they were either fake or malicious accounts being created on Reddit to work together, essentially talk smack about Reddit from what I would call so-called Fundrise competitors. I won't name names, mostly because I just don't want to put them into the public zeitgeist. But it was so obvious, because I would look at these accounts and they had only been created for a short period of time.
Yeah.
And the only thing they're doing is talking smack about Fundrise. Well, that really ruffled my feathers for probably good and bad reasons. And, part of it was because I'm invested in the company. I'm invested on and in the company. And two, because I just didn't like that it's not true. All facts are friendly, but cynicism and lies are not welcome.
Right.
And so I discovered that I just needed to be more and more transparent and more uncomfortably public with my face and my name, and and so where am I going with this? So my I don't disclose any of my other investments publicly. Just my Fundrise portfolio, because I'm not out there supporting Charles Schwab or TD Ameritrade or any other public. No, that's not exactly true, because of my experience with Joseph Carlson, and I followed some of his investments. I have posted on Twitter some of the stock trades that I've made, but it's for a completely different reason. And I'm here supporting Fundrise through this effort, this conversation that we're having. I created a Reddit subreddit because I didn't like some of the things I've already mentioned about, and so I put my portfolio out there so people. The thing is, good or bad, I'm going to publicly display it because I think that's a part of the transparency. It just so happens that for the past 2 years, mine has only been good, at least from my perspective. In 2024, I more than doubled my portfolio performance, more than doubled the average FundriseInvestors portfolio. And I attribute that to listening to the CEO. And reading what the company is writing, and then making decisions based on what I consumed from them. I don't deserve the credit. I'm trying to give credit where credit is due, and that's listen to these people, read what they write, and follow if you want to. Here's everything I'm invested in according to asset allocation percentages. There is nothing that anybody can't want to know about my Fundrise portfolio that they can't find out from my quarterly posts that I've been posting since March of 23. Over 2 years I've been doing this. And it went from feeling, oh my gosh, like this is privacy. This is a privacy issue that I'm making public, to it's just normalized for me now.
No, that makes sense. And I understand your emphasis on Fundrise and keeping that as the priority while also maintaining other portfolio. But I think it's relevant you don't have to mention the companies that these other investments are in, but you can at least mention what they are and how they fit into your overall strategy, right? Because for me, for example, I realized after reading Robert Kiyosaki's Rich Dad, Poor Dad, which I would recommend to everybody to read, just for personal financial literacy reasons, most people will only trust what somebody has done that they trust, that they see, right? So like your parents, your mother, your father, if your grandfather says, hey, I got this mutual fund that I've had, I'm going to outlive it, I'm going to give it to you, but I need you to get smarter about mutual funds. You will get smarter about mutual funds, and now you're comfortable with that, right? But now we start to realize that those people that were in our lives that did that, they're not there anymore, because that's a whole new generation that most of them fell victim to the 2008-2009 crash, where they had savings, but now they are very apprehensive about banking and federal government programs and things like that. Even my own mother, she reaches out to me to do the research for her, and I even have to walk her through a long, arduous process of letting her experience how this works and how there are other programs for her to get to where she needs to be. That's just the process. But but we are not, and I say we as you, me, and people like us, we don't have enough capital available to us where we can place all of this capital in this one vehicle, and that's all we need. We need layers of investments to help us reach financial independence. Now, you found Fundrise as your primary, going through the process of trial and error and doing research and doing due diligence, and essentially you're saving your friends, family, and everybody else that you invited the 24 months that you went through the process and say, hey, you don't have to go through 24 months. I've already done it. All you have to do is this. But, you know, some people, they want a brief summary of that 24 months. They don't want just, you know, here's what it is. So for me personally, Fundrise is one of 3 investment vehicles that I have in place that I'm testing out to see, you know, what do I want to be primary? What do I want to be secondary? And then what do I want to be tertiary? And my tertiary investment is one that I can forget about, literally. Like I can go months and then get an email out of the blue like, oh yeah, I do have that. Let me see what it's doing. And it's growing. That's what I have Fundrise for. I haven't set up automatic payments yet because I'm still trying to figure out what I want my contributions to be, how I want that to look at. Because I just actually opened up a high yield savings and I still got some more CDs going, but more than likely what's probably going to happen is, so my initial plan was the dividends that I was getting from the stock market, I was going, instead of reinvesting in the stock market, I would take those dividends and put that into Fundrise. But then when I did the research, once I take it out of my brokerage account, I owe taxes on that, even though it's going to Fundrise. Now, I did get an email from Fundrise about them opening up retirement accounts, IRAs, and things of that nature. I don't know if you should have gotten that email. Did you see that?
I have a Roth IRA with Fundrise, so I might not have received a new
okay,
one.
You already have one. So I don't have one, so it's probably marketed to me. And when I talked to my financial advisor, he said there's certain programs where if I set the money up, if I set the dividends from my brokerage account to go directly to the IRA, there is taxes, but it's mostly tax deferred. It's like, this is what you would have owed, but because it's in this IRA, you don't have to owe it. But he said it's different. It just depends on the companies and who pays for the fees and things like that. And from what I was reading with Fundrise about their IRAs, it seems like they'll do it for like the first year, but then after that, you would still have to owe the taxes at the end. So there's a couple options out there. As far as Fundrise isn't just, like when you introduced it to me, it seemed like it was just real estate, but it's more than just real estate now. It's me personally, I don't like single-use financial institutions. I don't like to have a bank and it's only doing one thing. I need to get multiple products out of this bank. If I'm only getting one, then I need to reevaluate all my other banks to see if I can get it from them or if there's a better bank out there. So all of my banks at least give me 2 products under one roof, but then at the same time, I can't just have one bank, because if something happens with that one bank and all my money's tied into there, I don't want to have money in a mattress or some shit like that. I want to be able to get, other options. So I need, my levels of investing is, I have it labeled as easy access savings or easy access investing, restricted access investing, and then just set it and forget it investing. And
Sure.
Right now, Fundrise is probably going to be my set it and forget it, unless they come out with like a timeshare or some sort of program where I can get a discount on properties that they already have. But to be honest with you, I'm really interested in Fundrise's commercial side more than the residential side, especially with the way this government regime is going towards manufacturing. Those manufacturers got to be built. And Fundrise seems to be kind of, just based off of the 1K that you sent me, that I can pull it up because I asked the question. I'm like, what is the plan for future manufacturing or future commercial facilities? And it gives me a list of details on what Fundrise has planned for 2025, which is very intriguing to me. I don't know if you saw that.
Do you remind me what it's called?
Let me pull it. Hold on. Let me ask the question again. Let me pull it up. Where is it? All right. It's on the commercial side of Fundrise, not the residential. I know a lot of what you talk about is the residential side. I mean, that's your wheelhouse because you're avoiding being a landlord. I'm just looking at the emphasis of bringing manufacturing back to America.
Okay.
You
So
understand?
let me just try to clarify something. It's a little bit of semantics, but when you say commercial real estate, all of Fundrise's real estate is commercial real estate, as
Okay.
opposed to like this house that I'm sitting in right now. I'm a small time landlord and I'm going to rent to one renter. It's not commercial. I think the distinction that you're trying to draw is the difference between residential and industrial.
Industrial. There you go. Yeah.
Yeah, you mean
Thank you.
like warehouses? Yeah, no worries.
Right.
Yeah, so my preference is to be in Fundrise's best performing investments.
Right.
They've got 14 quote unquote funds. You know, I think technically the E-REITs are not funds from like an SEC perspective possibly, but you know, just for the sake of argument, we'll call all 14 of them funds. I kind of go through painstaking efforts to document and display, and I've been doing it for a couple of years now, a one-stop shop for to look at and assess all of Fundrise's funds next to each other. And I want to be in the best performing ones. And the kind of the tricky thing about that is the ones that have performed the best in the past aren't necessarily the ones that are going to perform the best in the future.
Correct.
And so I think the kind of the critical thinking that's necessary in order to determine how you want to allocate your current dollars that you have to invest, that you hope are going to be in Fundrise's best performing funds, is from listening to what the CEO and his team at Fundrise are saying and writing. And now to some of the comments that you made about my portfolio, so we got 3 buckets to choose from: real estate growth, private credit, and venture capital. Almost 2/3 of my asset allocation on Fundrise is in private credit. A full 60% of my portfolio is in private credit, which are loans. If I can oversimplify it, they're loans to land developers.
Okay.
That are returning, anywhere from 12 to 15% return on investment. And the reason why so much of my portfolio is allocated to that is because over 2 years ago, Ben Miller was saying that private credit was attractive. We were in a very different investing environment over 2 years ago than we are today. And boy, was Ben Miller right. And I'm very happy that I kind of made that plunge that I did with, for what for me was a large amount of money. And it's returned, I've gotten, if memory serves me correctly, something like $88,000 in dividends from Fundrise, from private credit. And what I feel a little bit of deja vu is Ben Miller and Fundrise is saying real estate growth looks attractive right now because of all the factors. What we're going on with the current administration, tariffs, the outlook for future, the federal funds rate. I don't know if you saw, but yesterday they decided to maintain the federal funds rate because of where unemployment is and I guess gross domestic product growth. Yeah. But if I had a chunk of money to invest, and I don't right now, I would be putting it into what I think are the most attractive Fundrise real estate growth funds. And like I said, I put that on display for anyone who wants to consume with my quarterly posts and periodically too. So I like Fundrise's best performing multifamily apartment complexes and Fundrise's best performing single family home horizontal build to rent neighborhoods and warehouses that they are ramping up because they're relatively new to invest. So I think that it kind of just depends on where you are at any point in time on what you think is the best use of the dollar that you have to invest.
Absolutely. And what is the risk that you're willing to take? I mean, that's always a factor. Like what is the risk, and are you willing to persevere through whatever risk. For example, I'm in the 1K that you sent me, and then I just asked some just general questions, and it alluded to, okay, there was a decline in Fundrise's or Rise Company Core's revenue between 23 and 24, right? So then I just asked, okay, well, what was the decline? Just sum it up for me. Top three: investment management and platform advisory revenue, real estate management revenue, real estate operating platform revenue. So those were the three that decline, but what you don't hear is individual account, anything about individual accounts, right?
Do you mean individual investor accounts?
Correct.
Okay. So a couple of thoughts. One is Fundrise maybe not in that document that you're looking at, but Fundrise periodically publishes, and I put it in my graphs, the investors' average return by fund.
Right.
And that is separate from how much revenue Fundrise's parent company, as you mentioned, Rise Companies Corp, are they growing revenue or not? Those are two different things. They matter if you're planning on investing in Fundrise, the company. You obviously want to see revenue growth and then eventually working towards profitability. But that is a separate thing from wanting to know how well the average Fundrise investor does in a particular fund. Is that fair?
Yes, absolutely.
So something else I wanted to touch on that you've touched on a couple of times is you talked about liquidity. How liquid are Fundrise investments? And it's something, because it went back to what you were seeing with the comments on the Better Business Bureau. People getting frustrated because when it came time for them to decide that they wanted to liquidate their investments, they weren't very well educated on how Fundrise works.
Right.
If you want to know, Fundrise makes it very evident that almost across the board, if not exactly across the board, all of their funds have a quarterly liquidity. So 4 times a year, every 3 months, if you want, you can take your money out of Fundrise's investments as long as there's not some sort of, call it a black swan event like COVID was at the time, up to something like 5% of the funds, I'm going to call it net asset value, hopefully that's correct, for up to 20% a year, right? 5 times 4, 20%. So as long as the amount of liquidations in a fund don't exceed 5% of the total net asset value of the fund, you can take your money out of a Fundrise investment fund quarterly, right? Every 3 months. Now, I view that, and some of what you were saying, I view that you also view it as that is a feature, not a bug of Fundrise's, I'm going to call it business plan or just how Fundrise works. That's private market investing. What's it's a matter of perspective. Let me see if I can get this out here. I'm sitting in this rental property that I bought 20 years ago and put money into when I lived in it and when renters lived in it, paid off the mortgage, and I cashed out the equity in it once in 20 years. I would not consider that very liquid. Now, I took this money and I invested on the Fundrise platform. I can take that money out 4 times a year. I consider that much more liquid than this real estate that I'm sitting in. So it's a matter of perspective. It is nowhere near as liquid as the New York Stock Exchange, 8 hours a day, 5 days a week, approximately. You can sell your Apple shares whenever you want during that time frame.
Right.
So like you were saying, if you want a set it and forget it kind of investment that you're not tracking constantly, then private market investing is better geared towards that than maybe something that you want to kind of obsessively check, like the stock market.
Okay. So if we talk specific, like we spoke about Rise as the parent company, Fundrise is a subsidiary, right? So if we just speak specifically about Fundrise, like with any financial advisor, client relationship, or any commission-based relationship, most people want to know, okay, how are you getting money? And is that money coming from me, or is that money coming from the company, right? So if I ask so this is the fiscal year ending December 31st, 2024, 1K. And I'm using Adobe's AI to just streamline these questions for me. If I
Nice.
ask Adobe, let's see, the question that I asked was, what was Fundrise's performance for the year 2024? And it breaks down, number one, assets under management, AUM, goes into detail about that. Active users, 395,000 active investor accounts, 2.3 million active users as of December of 2024. So there was growth there. But then it goes into revenue contribution and how Fundrise earns revenue, right? And it says Fundrise generated revenue through investment management and platform advisory fees, real estate management fees, real estate operating platform fees, for a total revenue from those activities, which equate to 57 million in 2024, which is actually down 11% from 64 million in 2023. Now, my portfolio on Fundrise is only $540. So I didn't even get a tax statement. So I haven't seen any of these fees. Your portfolio is significantly more than mine. Do you recall any of these fees from a personal standpoint?
I don't want to get distracted, but you should have gotten a 1099.
No, I actually got an email from them saying my portfolio does not meet the criteria for a 1099.
Fair enough. I plead ignorance there. Okay. Please
I
ask that question.
I looked for it. I was like, hey, I know I got, because I have more than 300. I assumed I would have to report it as a 1099-R, but it's not a retirement account. But then when I went in my account, there was actually, they sent me an email saying after review of your account, your value does not meet the criteria for a 1099.
I'm gonna guess that the amount of dividends you were paid or net asset value,
something like that.
What is that called? End of year distribution. Anyway, yeah, it must have been below the threshold. Fair enough.
Yeah,
I got focused on that.
No, so the question is,
yeah,
from your perspective, do you notice any of these fees where it adds to Fundrise's revenue? Does it seem like it's taking from your portfolio or no? Yeah. Okay.
Here's my thought about fees, and it's kind of a lot to unpack, more than what you're asking. If you look at my portfolio, the size of my portfolio, the size of my returns, my total returns and dividends and unrealized appreciation, so appreciation that Fundrise says I have that I have not sold yet, that number's about it's over $110,000. It goes from 109 to 111 recently, depending on, I think, primarily Service Titan's publicly traded stock price. But I don't have I pay much more closely attention to my total returns than I do my total fees. I don't have that number memorized, but by comparison, it's tiny. It's hundreds of dollars.
But you're not getting 100% of the dividends that Fundrise is getting. Like, they are taking a percentage of your dividends to maintain your account and the company and things like that. Which is, I mean, that sounds obvious to me. Like, they have to. Yeah,
they charge a fee, right? So there's a fees from memory. I know there's a 0.15% management fee that's that across the board, regardless of the funds that you're invested in, if I'm speaking correctly, that everybody pays. And then there's a point, depending on the fund, you have a fund. I'm going to call it a fund management fee. That's probably incorrect, but depending on the fund, it's 0.85%. I think the innovation fund, I know the innovation fund's fee is a little bit higher. It's a 3% total. So it depends on the fee. What matters is, excuse me, I meant to say the fee depends on the fund.
Right.
What matters is the way Fundrise makes money, if I can oversimplify it, is they charge fees for their service. They're providing a service of investments for us to participate in, and that's how they pay their bills, is by taking that fee. Now, my personal opinion is the fees are very low. If you compare them to the thrift savings plan, they're not that low. Those are, we're talking like, I want to say from memory, like 0.2. They're 20 basis points, which is $20 on $10,000. 0.2%, maybe even lower than that. Total fees that thrift savings plan charges. And it might depend on the fund, but they're pretty similar. Anyway, if you don't compare Fundrise to the thrift savings plan, but you compare it to other fund managers, Fundrise has low fees compared to peers, and they are working to drive fees towards zero. My words, not theirs. But they kind of are taking a page out of the Vanguard playbook by providing highly valuable services, funds that we can invest in at relatively very low fees. And I don't have it in front of me for us to pull up, but they're publicly available. Like they're in the Fundrise Education Center. There's an article is everything you ever wanted to know about Fundrise fees. And you can really dig into the details about it.
So I logged in, right? I just went to my portfolio. I see there's a section for advisory fees. Like I said, my portfolio is only $541.26. My advisory fees were 33 cents. If I scroll over it, it lists advisory fees 0.15%. We charge 0.15% in annual advisory fees for managing your account through our online platform. Learn everything you ever wanted to know about Fundrise fees through the article link below. If I click the link, it takes me to it. So I only asked that question for you to just explain to everybody, hey, ask fees about everything that you have. And when you know that number, compare them. Like, what are the fees that you're paying in your checking and savings account? What are the fees that you're paying in your stock market account? What are the fees that like? You're going to be paying fees for somebody managing your investment, but what are the fees? And then let that be part of your decision of which investment is better for me, right?
That's a very good point, Chivas. And something that I'll say, us, the investors, and then there are fees that Fundrise, there are expenses that Fundrise has to charge fees for that are at the fund level, depending on the fund. And so you really kind of have to do some like forensic accounting a little bit in order to really do that math. But yeah, like just today, yeah, like you're saying, it's a matter of perspective on which you want to compare everything to.
No, that's kind of what I was getting to, because most people that, they're going to ask you, like, if you're a financial advisor or a stockbroker, most people are ready to hear, I get 3%. Well, you get 3% of what? You get 3% of the value of my portfolio, or 3% of, something else. Well, it's going off of your portfolio, but it's nowhere near.
Do you, I'm just curious, do you have any questions for me, or a question for me about like that?
You're starting to break up. Is your internet all spotty again? You was broken up there. Ask the question again. What was the question?
I'm sorry about that. Did you have a question by any chance about, like, you mentioned that I think it was like 30-something cent fee, the 0.15% fee. Like, was there anything? Did you have a question about that, or why that is?
No. So my question was, if I'm getting charged 33 cents, what are you getting charged based on your portfolio?
If you give me a second, I'm going to quickly look this up on my cell phone. I'll pull up the app right here. I don't know this off the top. I don't know this off the top of my head. Maybe I should, because I think it's actually a selling point. Kind of a praise to sing of Fundrises. All right.
I'm looking at my breakdown: distributions, reinvestment, contributions, gross dividend, appreciation. What do you got?
So my total advisory fees after being on Fundrise for 3 years, this past February, March, with a total net return as of today of $110,401. My advisory fees, which are not all the fees, these are just the fees that are directly charged to me. Correct. $304, $110,400 in return. $304 in advisory fees.
Okay. So if we plug that in as a percentage,
Well, 0.1% of my, what is the right denominator to look at? The total amount I have invested?
should be your dividends, right?
Well, we want to know, well, what is this advisory fee a percentage of? And I think it should be assets under management. So the numerator is the $304 in fees. How much do I have invested on the platform? And I'm just going to use the term net contribution. That's how much I've invested on the platform, including what they pay, and then you deduct the dividends that they paid to me. So that number is $500,000. So assets under management, we're going to call $500,000, $500,000,
Okay.
$300 in fees. Well, 1% of $500,000 is $5,000. 0.1% is $500. So less than 0.1%, $304 in advisory fees have been charged according to my assets under management that I've contributed. Now my total assets under management is closer to $610,000 because of the return that's included on there.
Right.
So we're at less than 0.1% in fees that I've been charged.
So let's see. Asset under management. Fundrise investment products had 2.9 billion in equity AUM, asset under management, as of December 31, 2024, slightly up from 2.8 billion in 2023. The growth was attributed to stabilizing interest rates and improved property fundamentals despite ongoing headwinds from higher borrowing costs. So break that down.
Well, a thought that I have in response to some of the things you said, not so much what you just read, but although it is related to that, but so Fundrise had lower revenue in 2024 than 2023. I'm paraphrasing, forgive me, I'm quoting from memory because I don't have it in front of me and I'm not technically inclined to be able to pull it up without probably canceling the call, but that was a strategic decision. I think it's written in there. I alluded to it earlier. Fundrise being the tortoise, not the hare, and the fire ant, not the grasshopper from like those fables.
Right.
Long-term conservative, you check your portfolio tomorrow and your money's going to still be there kind of investment platform. And I believe Fundrise made the conscious decision to not be fully invested with the cash they had available to invest because of their analysis of the macro market conditions. Now, so what that means is because that money wasn't invested, I'm inferring that means they couldn't collect fees on it, which I think is part of the explanation, if not the majority of the explanation, for why their revenue went down. And so that's one thing I have to say about that.
Okay.
What do you think about that?
No,
fair?
No. So the next question that I would ask if I was analyzing Fundrise from their quarterly report is, what is their strategy to mitigate what's going on right now? Like, how are you maintaining the mission of minimizing fees, even though we're coming on potential recession, we're coming on potential inflation? And they detail it in the quarterly report that it's not easy to find, because I couldn't find it easily, but I reached out to you and you found it through your network, because they don't have it just readily available on the website. They have what they want you to read, not so much what they filed with the SEC. But no, there is a strategy, but my apprehension to the strategy that's detailed in a quarterly report, it's not so much passé, but this is what they were forecasting at that moment in time. We don't know if anything has changed, but that's all we got to go off of, right? So, they say in the stock market all the time, it's not timing the market, it's time in the market. That's not just with the stock market, that's with any investment. Like, the longer you're in there, the more you can benefit. But for this call, I would definitely recommend, no matter what you're doing, have an exit strategy. Like, have a plan on, okay, if something happens with Fundrise and my investment of $1,000, like mostly for my stocks, it's minus 20%. So if I spend $100 for a share and it drops below $80, I'm pulling out. I don't care what happens. I don't even, you know what I'm saying? So I do the same thing with Fundrise. Fundrise hasn't dropped. Now, has it like leaps and bounds jumped? No, I don't have enough money invested for it to do that, but it hasn't lost money. So that's part of my,
Right.
you know what I'm saying? So that's kind of part of how I can feel comfortable keeping that, and then try to learn more on how can I get it to grow, not so much extremely prolifically, but I can get it to grow to where every quarter I can glance at and say, yep, it's doing good, and then move on. Or vice versa. I can say it's doing bad, but they can justify, okay, here's what we're forecasting. You'll see a dip, but trust me, it'll come back up because of XYZ. For instance, most companies, if it's a major company that's opening up a new facility in a whole nother country, their share price is probably going to drop because they're going to use stock market equity to probably cover some of those costs. That's justifiable. They're telling me, hey, the share price is going to drop, adjust your ceiling and your floor if necessary, but don't just pull out because we're expecting it. My mother, the company that she works with, they participate in a employee stock purchase program, right? And if you follow the last 5 years, they manipulate their share price to drop right before they open up the window to offer it to new employees, probably to make it cheaper for them to get more employees invested. And then after about 2 months, the share price shoots right back up. Now, I don't know how legal that is, but that's what they do. And my mother's like, oh, that makes sense, because I'm like, I'm pretty sure that's stock manipulation, but I mean, I don't work there. And if you can make money off of it, that's fine.
Sure.
So my next question for you is, I want you to speak about your passion with the birthday fund that you reached out to me about, but you were very adamant to make sure it goes into the venture capital fund and nothing else. So talk to me about why I couldn't put it in private credit or real estate. It had to go to venture capital.
Yeah, man, what a good question. I really appreciate that, Chivas. I don't think I don't have a predetermined answer for you. Why have I done it this way?
What is it about venture capital that is so intriguing to you that you're like, hey, you send me the text message, hey, I know your birthday's coming up, it's on my calendar. You know how we do. You put $100 in, I'll match it. And I was like, I totally forgot about that. Which, that birthday strategy, you need to do that with like everybody you've reached out to that hasn't invested yet, and then just kind of put that on your list to.
Man, I gotta be careful, because on this topic alone, I could talk for an hour. I really appreciate you bringing this up. So let me take you back. It's hard to know where to start, but I shared a little bit with you about my animosity with the Fundrise subreddit that I created a new subreddit to replace for me. Well, I want to grow that subreddit. It's called r/FundriseInvestors.
Okay.
Right, the subreddit FundriseInvestors. And that is an easy thing to say and a not so easy thing to do if you're not posting about something whiz-bang, flashy, high attention grabbing, like, for example, Palantir, the company Palantir, or something that Bitcoin or Coinbase, like a meme coin, I should say, or a meme stock. Fundrise is not a flashy, shoot to the moon, get rich quick kind of scheme. And so that I think it attracts a certain kind of mentality, a certain kind of investor, kind of a slow and steady. And what that means is, for me, if you want to start a forum, a chat room about it, you're not going to get 1,000 people quickly. We're at 203 subreddit followers.
Right.
And so I don't even know if this is how I got the idea. It's probably partly tied to, here's the funny thing. My calendar never had any of my friends and family's birthdays on it until now. And now I use it as kind of a follow-up tool. I told you earlier that I'm planting seeds.
Right, absolutely.
Just kind of like I think about how seeds were planted with me in my mind to learn more about Fundrise and thinking about more strongly allocating my investment resources to Fundrise. And, people sign up, they accept my gift, and then I kind of leave them alone, or at least I try to leave them alone to do what I say I'm going to do, which is give a gift. I'm not trying to get people to invest. That's true. And do I hope that they invest on Fundrise? Of course I do, because I want them to see what I know to be true, which is Fundrise is a very good, very credible, conservative, successful investing platform. But I would never ask people or tell people to put their money on the platform, because that's a very personal thing that, it's like trying to, I'm a terrible salesman, and I'm not trying to sell people on doing that. I want to find a win-win-win. A win for you is you get a $110 appreciating asset from me, no question asked. It's a gift. It's a win for Fundrise because they get a new investor. They get a new app user. And it's a win for me if for one, I get to support a company that I'm passionate about and I believe in. And I get to have the opportunity to talk about it with people like you and friends and family and other friends and my family. And in a long term, I'm in it for the long term with Fundrise. I own $52,000 of common stock in Fundrise because for me, this is an attempt for a generational wealth play by me. In my mind, do I think Fundrise is going to get as big and as profitable as Amazon? No, I don't think that's a reasonable expectation. But I can't go back to 1999 and invest in Amazon when Jeff Bezos was literally selling books out of his garage. Right. This is kind of the closest thing that I can do. I feel like I'm early. I feel like I found a credible, successful, hardworking, talented team of people who are doing a wonderful thing for society. They're not just helping people with investments. They are participating in the real economy, Chivas. They're really building houses. They're really providing supply to people who probably want to buy a home but can't yet buy a home, and so they're renting real homes like the one that I'm sitting in real neighborhoods. If you were to drive through it, you wouldn't know that everybody in the neighborhood is a renter, and that's a real benefit to society. They're providing equity in companies like OpenAI and Anduril and Canva, Vanta, Anthropic, and Gumloop and Highpoint and Databricks and DPD Labs and on and on. 3 years ago, you couldn't buy, if you were not an accredited investor, I believe what I'm about to say is true, you couldn't have bought equity in these companies for $10. And now you can. And that is a real benefit to society that Fundrise is providing. Okay, so let me get back to your question. Why am I doing it? One, I'm freaking passionate about it, if you can't tell. Two, why the venture capital fund? Why the innovation fund, which is a venture capital investment? Well, because it's more volatile. It's more volatile, than real estate and loans to real estate developers to build real estate. I want people to see, because I predict that it's going to be long-term successful investment. I want to bring people's attention to something. And I think the thing that's going to do that in the near term, and maybe also the long term, more than any other asset class on Fundrise, is probably the innovation fund. So the gift I want to give people is their attention to inform them about this thing that I think is going to be, so far it's up, call it 22, 25%, the innovation fund, something like that. And that's just in the past 3 quarters, really. The vast majority of that return on investment is the past 3 quarters. And I think we're going to see more of the same with that. So the reason why I chose it, I initially started giving away. I would when I first started my subreddit, FundriseInvestors, I wanted to bring attention to it. So I started giving away $100 for one thing here or there. Like the first person to post in the sub, who's actually a mod in the sub, I gave him $100 for the first post. And then I would ask a question, and the first person I answered correctly, I would give away $100 of Fundrise Innovation Fund shares. And then I started doing it for people's birthdays to bring people back. Okay, maybe you signed up for Fundrise with my invitation 6 months ago. Well, now it's your birthday. Have you paid attention to Fundrise? It's okay if you haven't. Well, now I'm trying to get people to have skin in the game. Is it a little bit manipulative? I don't know. I'll let you answer that. I certainly am trying to be mindful about bringing people's attention to it in a way that doesn't turn them off. Does it turn some people off? Absolutely. Have I lost some friendships over this? My next door neighbor, who's a very close friend / person in my life, kind of borderline family member, she says you can't lose a friend. So some of the people that I've turned off from talking so much about Fundrise, were they ever really my friend? That's open to interpretation. And so, does that answer your question? Why do I?
Yeah, it does. I mean, again, it goes back to the parent analogy that I alluded to earlier, where you found something. Not only did you find Fundrise, but then while you're here, you're like, oh, this is really cool that they offer. Let me share this with people who I know or people that I hope would accept it on a recurring basis, not in perpetuity, but as you do it and that you're willing to do it, right? For us to take advantage of. Now, for me, when you sent me the text message, I probably did not contribute not 1 cent into Fundrise up until you texted me and saying, hey, you put in 100, I'll put in 100. And I'm like, yeah, I probably should. Like, that's probably the most contributions that's not probably. I'm looking at it. That was the most contributions I had up until that point. But it reminds me, like, I really need to try to figure out how to get the most out of this. What can I do? So for me, it was just it was a good incentive.
I appreciate you reminding me that. It actually makes me a little bit emotional, which I'm kind of embarrassed about. But that must have been before I had started doing what I'll call my birthday program. It's getting a little bit out of control. It's actually getting pretty expensive. Like this nightmare renovation is extremely expensive. 6 months ago, I had about $130,000 worth of credit card debt. The vast majority of it is because of this house. And now I'm down to like 87,000. So I am like, because a lot of that debt is starting to stop being interest free, and I'm starting to have to pay interest on some of it, so that I'm really focused on that. And so it gets tight. Like this month alone, I know I have 400, which is 4 birthdays that I'm celebrating with people by giving them $100 in innovation fund shares. Let me give you 2 other examples.
Okay.
I'm going to a wedding in Seattle from a guy who was a roommate of mine. He was a Navy pilot. Now he's a Delta airline captain. When I lived in this house, he was one of my 12 roommates. All of them pilots or naval flight officers. And he was me and my next door neighbor. Then at the time is still my next door neighbor today. So we've known each other for 20 years. And she loves this guy more than me. And I know she loves me a lot. And we're both going to this wedding. Well, he's a referral of mine. Mm-hmm. And his wife, who I've never met or spoken to, is also a referral of mine. And when I received their wedding invitation, which is the first wedding invitation I've received in 10 years, because I'm almost 44 and you just stop getting them over time when you're my age and when you live my life. So I was super excited and I'm very happy, and I'm going to Seattle for a week, which I've never been to. And I was feeling very generous, quote unquote, very generous. So I said, hey, his name, I won't say his name because I don't have permission to say his name. But I said, hey, bud, I'm giving you and your wife $1,000 in Fundrise Innovation Fund shares for your wedding.
Nice.
500 to him, 500 to her. But what does that mean? I can't just give him the shares. He's got to invest the money. They're doing pretty well. Dual income, no kids, and they're both pilots. So, they got it. They got the discretionary income. So it was, I want to call it February 26th. I know it was February 26th. The Fundrise Innovation Fund was $11.28 a share. Mm-hmm. And they put $1,000 into it. And because money is much more tight for me than I suspect it is for him, I'm slowly but surely periodically paying off this IOU that I owe them. Mm-hmm. Well, not that long ago, the Innovation Fund share price was $12.40 a share. Look at my gift already giving him return on investment. That's almost 10% up.
Right.
Boy, am I happy about that. The other vignette, I paid off $400 of the $1,000. And I don't know that I'm going to have it paid off by the time of the wedding reception. They've been married for 5 years, but they got married during the peak of COVID, so they didn't get to have a reception. Mm-hmm. And they're having it 5 years later.
Right.
Excuse me. I might have to pay it off after I've come and gone to the wedding reception, but I think he knows I'm good for it. So my health situation, and I also post about it publicly. More not looking for sympathy. One, everybody needs to go get their colonoscopy. I've got stage 2 colorectal cancer. I thought I was 2 years early getting my first colonoscopy, and it turns out I was 3 years late. So public service announcement to you and anyone else listening to this: go get your first colonoscopy, or your routine one if you're out of periodicity. Anyway, my gastroenterologist, who performed a 5-hour surgery on me and removed tumors from my body and told me I have cancer, has an amazing bedside manner. As far as I know, he's a really good surgeon, because here I am alive,
Yeah.
right? I have no idea I was asleep for it.
Vigorous as ever.
But when that when that happened, when I woke up, or in the day that he told me I had cancer, which was October the 1st, and I sobbed like a baby when he told me that, because I watched both my parents die for cancer. And all of those memories, those unresolved psychological issues. Yeah, exactly. That I was dealing with at the time, and I'm still dealing with. They went from the back of my mind suppressed to the front of my mind, and I realized, oh, I'm about to go through what I watched my parents go through. Anyway, the point is, it was a formative experience. And something that I was really impressed by is, like, look at how valuable this man is to society, that I cannot come close to touching. And where I am relative to him doesn't really matter, but I really do respect it.
Right.
And so I called up his hospital, because they have an employee recognition program where you can make a donation in an employee's name. And I said, hey, I want to do this. Again, I was looking for a win-win scenario, which my therapist feels might be a little bit, it's ripe for misinterpretation, that people can think I'm being manipulative, on and on and on, which he's not wrong. And I'm still doing what I'm doing. I'm trying to thread a needle here.
Right.
And I said, hey, hospital, I want to make $1,000 donation in my doctor's name to your nonprofit employee recognition program. And they didn't take me up on my offer, which is fine.
They turned you down.
I understand why they did, to be honest with you, because I wasn't trying to hand them $1,000 cash. I was trying to set up a situation where they create a Fundrise account, and I'm going to contribute $900 cash to it, and Fundrise is going to give them $100 in my mind, because of my invitation referral voucher. Well, they politely declined the offer by just not taking me up on it. Well, I just sent a card. I had these cards created. And I don't know if I've shared it with you. I posted them online, where it basically says, I ordered 100 of these, and I said, hey, it says, please accept a token of my gratitude for your contributions to both my journey in life and for what you do to better our society. I think the seed for this idea was planted that fateful day on October the 1st, when I thought I was going through a routine colonoscopy, my first one, when really I was learning that I have a life-threatening illness.
Right.
Well, I wanted to thank that guy, and I sent him this card recently, and I wrote a thank you note in there, and I said, hey, your hospital didn't accept my offer. I'm extending the offer to you. So just like my former roommate and my friend whose wedding reception I'm going to, I said, hey, doc, if you want it, I'm going to give you $1,000 via Fundrise, because this is what I do, man. This is how I contribute to society, which is nowhere near as impactful as what you do, doctor, life-saving doctor.
Right.
But it's what I do, and I'm happy to do it. It's what I'm passionate about, and it costs me money. And as far as I'm concerned, that's everything. It's, what more do you need to know that I'm willing to do this at an expense to me, because of how much I believe in the company and how literally valuable it has been, literally to my finances and also figuratively. So there's my soapbox that I'll step down off of.
Well, I mean, I'm glad you shared that portion of your journey with me and with the audience. It makes you, I mean, for me, nobody's invincible. Everybody has something. And then, for you go in for something that's routine. We hear it all the time. If you just pay attention, people go in for routine stuff all the time, and they come out and they're like, you're stage 2, you're stage 3. And you're like, I feel fine. I feel great. And they're like, yeah, you're supposed to. That's how it works. So if you're not getting your annual checkups, especially if you're in the VA and it's free, go get your annual checkups, and then don't don't go in there being resistive. Be open to whatever they got, because they're trying to preserve your life. So thank you for sharing. But then that was a great segue into my last question. So as you were speaking about the journey, the next question that comes to mind when we're talking about investments is, well, if I expire, what happens to this fund? What happens to my Fundrise account? So
you're a really good interviewer.
Thank you. So while you were speaking, I happened to go to my account, and it has it set up to where I can set up a beneficiary. I haven't set up a beneficiary. I have nobody set up as a beneficiary, and it's a process to do it, but at least it's available for you to set up your Fundrise account to be a beneficiary to. Let's see the options that it gives you: spouse, non-spouse, individual, trust, entity, and estate. Now, I'm not familiar with trust, entity, and estate. So, but as an investment vehicle, it is set up to where you can set up a beneficiary. So in the event you expire, you need to add that to your legacy standard operating procedure on whoever you're setting it up for. Hey, make sure this fund goes to this person. So my question to you is, have you set up beneficiaries for your fund?
You're very good at this, and this is just like your last question, where I could talk for a very long time about this, and I'll try to be as succinct as I can be. But on October the 1st, when I found out that I have cancer, boy, did my mind focus on my estate plan.
Right.
A lot.
Right.
A lot. And it wasn't an emergency, but it was at the forefront of my mind. Here's the thing, just generally speaking, you should set a beneficiary, because we never know if we're going to get hit by a bust.
Absolutely.
And before I knew I had cancer, I had a beneficiary, and he's my oldest and best friend from where I'm from. And the funny thing is, they have the once I realized I needed to have a will for because I have cancer, not just because you need to have a will, because anything can happen. I no longer wanted my friend, my oldest and best friend, to be my Fundrise beneficiary, because he is not as strong a believer in private market investing and Fundrise investing as I want the person who potentially is going to inherit my Fundrise portfolio to be. And why do I say that? Is if I hand this portfolio over to somebody, I want them to agree that they are not going to sell except for in the most dire emergency situation any of my Fundrise investments for at least a decade. And so who did I change the beneficiary to? I ask a rhetorical question. His wife, who has been incredible. They both have been, by the way, but her especially, have just been incredibly supportive of me as I've gone through this health scare. And boy, do you find out who your friends are without trying to find out when you go through something like this. And they both, my dad passed away a couple of years ago in the same city that they live in, and they just showed up, man. And now that I'm going through this health situation, they just showed up and have been amazingly supportive. Well, his wife, I trust them both equally, but I trust her more with doing what I want done. If I need to pass on my Fundrise portfolio to somebody to not sell it. And for all the reasons that we've already talked about, it's a long-term, relatively illiquid, but it's also more liquid than some things, like rental properties, in my opinion. I trust, and so I set her as a beneficiary. I don't have a will yet. I might need to have surgery. Before I have surgery, I'm certainly going to have a will. I reached out to the Fundrise director of investor relations. I think I can say his name because, if you look him up on LinkedIn, that's his title. His name is Colin Callahan, I believe. And I was asking him questions in the emails, and I'm like, hey, what's the benefit of me having a trust? It was just initial research, initial inquiries, not even considered research yet. This is something I'm going to use AI for here pretty soon before I need to have a will. Well, do I need to set this thing up as a trust? And the reason why I'm thinking that's the case is because how restrictive do I want to make my beneficiaries' ability to actually sell these investments? And I think if I have a trust, I'm guessing here without having done my research, it's going to make it much more restrictive. You know, if I don't have a trust and I just leave her as the beneficiary, she's going to be able to do what she wants when she wants with my Fundrise portfolio that becomes her Fundrise portfolio. And I trust her. And if I'm gone, what does it really matter if she decides to sell it? But if I do want to have more control after I'm gone, I think the answer is to set up a trust, because then she'll probably have to go through more legal wickets. I'm going to call it legal wickets. Then, you know, she's got a 13-year-old, a 14-year-old, and an 11 or a 12-year-old. And if in 10 years they want to buy a house with my Fundrise portfolio or pay for college or whatever, which I think is a terrible use of it, because I think what should be done with it is nothing. I think you should just leave it alone for decades and watch it grow and enjoy the benefits of compounding interest and compounding appreciation. You know what I mean? I really believe that my Fundrise portfolio is going to turn into something substantial. I set a 5-year goal of having $1 million on and in Fundrise by January 2028, and I have something like 52% of that time left, and I've achieved something like 62% of the goal. I'm ahead of schedule. I expect to stay ahead of schedule. I don't know how long I'm going to live, but if I live longer, I'll probably set a 10-year goal of having $1 million of return on the platform. I don't know how reasonable that expectation is, but I'm starting to think, well, it looks like I'm going to achieve my 5-year goal. What's next? You know what I mean?
Absolutely.
So that's my answer to your question, which I really appreciate that question. And I thought a lot about it. And I set your beneficiary, Chivas, and because we never know if we're going to get hit by a bus. And I need to, it's on my list of things to do. I'm meeting with my surgeon here in a couple of weeks, and I'm going to go under anesthesia for that. It's nothing too substantial, but definitely before I have surgery. Hopefully I won't need surgery, but if I do, I will definitely have a will before that. So what do you think about all that?
Great. I mean, that's all good, because you should, I mean, with you not having common law statutes in place, if it's not written, it goes to the state.
Right. Common
knowledge. If it's not written, it goes to the state, and then you're letting somebody else make decisions on your behalf without you being there, and it's out of your control. So you definitely want to get things in place to keep your vision in place even after you expire. Now, from what you said, you know, you want it to be transferred to somebody that you trust is going to continue the legacy that you started. So that you know, kind of sparked my interest of, okay, well, what's my investment plan? And I have my investment plan set up as supplemental income, which I have it set up to where when it reaches a certain amount of return on a monthly basis, then I want to use that as, you know, supplemental income. You know, based off. Right. So is that kind of what you have set up? Because you kind of alluded to, hey, I want money going in, don't have no money coming out, even if you want to set it up as passive income, because you're getting Social Security, you're getting military pension, you're getting VA disability. Still don't touch this, leave this alone. Whereas I want to get it to a point to where it grows enough to where it makes its own money and there's enough left over for me to use as passive income in lieu of pension, disability, Social Security.
Yeah, so my situation is very unique because, you know, if this renter in this house hadn't ruined this house, I had a very different plan for that income. I was planning on using it to reinvest. And I've done some of that with some of my dividends, so almost $90,000 in dividends. I want to say more than half of that has been reinvested. And what I've done with probably the balance of that is put it towards paying off these bills. And at our age, investment income is probably a little bit less attractive for somebody that is closer towards permanent retirement.
Yeah.
Who might, because they might be in a lower tax bracket, or they're just more interested in income than appreciation. The reason why, and I'm going to repeat myself a little bit from the beginning of our conversation, the reason why I decided to put, I'm going to say the number, $373,000 into the Fundrise Opportunistic Credit Fund was because 2+ years ago, the CEO was saying it was attractive. My words, not his, or maybe his exact words, but he had a lot more words than that to describe it. And I knew that if the Fundrise is as good as I thought they were then, and I think they're even better now, over 2 years later, if they were going to provide me, it was returning 13% per year at the time.
Right.
It's returning 12.5% per year now, dividend distribution yield. That's an average stock market year return. I was like, whoa, what's the trade-off here?
Right.
The trade-off is, you got to pay taxes on the dividends.
Right.
And so you get a net return that's lower than whatever the distribution.
Now, is that dividends taken out or is that dividends accumulated?
So here's the thing. So I think that terminology, right? So I think what you're asking is that dividends distributed or dividends reinvested, right?
Right. Correct.
So with the opportunistic credit fund, we do not have the opportunity to automatically reinvest the dividends because of the nature of the fund. And I won't go into the details of that, but it just is true. So they have to distribute the dividends.
Gotcha.
And even if they weren't distributed, it's a taxable event. Even if they were automatically reinvested, it's a taxable event. So it's sort of a distinction without a difference, I think is the term. So what I wanted to do was invest the money, and I wanted to have the opportunity to see where the stock market was and take the dividend, invest it in the stock market if it looked attractive at the time that the dividend was paid, or reinvest it back into Fundrise, or pay off my bills with it. What I bought with the investment was flexibility, optionality, and it has lived up to that expectation.
So let me ask I'm asking a 10K or the 1K question right now. Is Fundrise invested in federal facilities? Just out of curiosity, I just want to see what it says. But no, that's really good, information. Because I'm curious, because Fundrise is in the real estate. We know from our experience in the Navy, the military just in general, they buy property left and right all the time. How they do that, I'm not familiar with. You would know more than me how that process goes, but is that something Fundrise would be kind of looking towards? Sponsorization or managed through its platforms?
Looking towards what? Buying
federal facilities. Like that are not like on base, like off base federal facilities, like protected facilities or facilities management. They're not. I'm just trying to see how broad Fundrise is. So hey, great conversation, great information. Really appreciate the information that you provide. The way you try to explain it, where it's it's not so much Jetsons, but it's not so much Flintstones. It's kind of right there in between, so we can kind of all understand. And closing, I want to point out, in what I took from a lot of what you said is, if something were to happen to you, you are not going to give anything back to the Navy. That's what I did not hear you say. You are definitely not going to put a portion, a percentage, or any of that goes to the Navy for patriotism or our 20 years. It's just going to go to somebody you trust that's going to keep the legacy. Hey, no big deal, no judgment. This is a judgment-free zone. Just saying, that's what I didn't hear. But what I did hear is that you didn't approach Fundrise from an emotional decision. You were searching for something that could be better than stock market or meta or whatever, or real estate, because real estate had kind of burnt you out. And you don't really speak about what was the competition to Fundrise other than you put it in the stock market and then real estate. Like at a later conversation, I want you to think about it, not right now, but like you landed on Fundrise, but like what was who were the company, or if you could talk about it briefly in 5 or 10 minutes, like who were you really like, do I want to do Fundrise or do I want to go over here? Because you know, at that, if it sounds like at the point of you making this decision, Bitcoin was still really hot, and a lot of people were invested in Bitcoin. It was very attractive at the time, but you saw all of that, and you still decided, you know, I'm gonna go Fundrise because I don't want to be a landlord, but I understand the value of real estate. Is that accurate?
I'll try and keep this succinct. My response to that is that conviction is a very personal thing. Having trust and conviction in something that you're investing in is a personal process. We've talked a little bit about this, like with our family members.
Absolutely.
Family members maybe trusting us or not trusting us or needing to be convinced. And at the time, I had $343,000 of equity to invest, and it was technically borrowed money. You know, when you cash out the equity
Right.
in rental property, you owe that money back, and then it's in a pretty conservative debt instrument, I'll call it, because I have 30-year mortgages at fixed interest rates that I can comfortably cover regardless I have renters or not. So is it more risky than having the cash? Yes, but in the grand scheme of things, it's I would say for me, I'm very comfortable with that risk profile. So I was investing borrowed money.
Right.
And for me, I was investing a relatively large amount of money. And what I did as soon as I pulled that money out, as soon as I cashed out the equity, is I put it in US Treasuries.
Okay.
I put it in 30, 60, 90-day T-bills because what I wanted to do was put a fail-safe in place to prevent myself from making a big, stupid, knee-jerk decision.
Right.
Because it was exciting. That was a lot of money to put to work all at once. And I wanted to prevent myself from being able to do it. Now, so, you know, that was conservative and that was, I guess, prudent in hindsight, but I could have made a decision to put all of that into meta shares at $88 a share. And boy, would that have been lucrative. But I do not think it would have been possible. And I think it's safe to say it would have been impossible for me to gain the level of conviction in putting that amount of money into meta. That was the only thing that I was really seriously thinking. I was not toying with the idea of putting it into crypto, Bitcoin in particular, or anything else in general, because I didn't know jack squat about Bitcoin. I was invested in crypto at the time. I was invested in Bitcoin and Ethereum and Solana. Not yet.
You didn't have Doge? Everybody had Doge.
No.
You didn't have Doge?
No, I do not, and I don't think I will ever. But that is not something I was going to have the level of conviction to put that much money into. Now, you know, I sold to a few $100,000 worth of Netflix shares a long time ago that are now worth $20 million. So I am not worth $20 million because I made that decision. That was a very formative experience. And I bought, I don't know, $40,000 worth of Groupon shares that I sold at something like, I don't know, $6,000, $7,000. That's a formative experience. I actually sold the last of those shares today. And so that's part of my psychology of money. That's part of my fingerprint of investing. And all of that, all of those thoughts and feelings and experiences went into my decisions on how to invest that equity that I cashed out. And so in summary, I had the conviction in Fundrise, the platform, in Ben Miller, the CEO, that I've listened to that man talk, I want to say, for 80 plus hours through all of his interviews, off of Onward and on Onward. And I've read just about everything he's written on Reddit. It's hard to get that level of conviction without putting in that time and effort and energy and interest. And I just don't see me getting that in very many other things. I have other investments that I put quite a bit of money into, but I did not do that same level of due diligence that I did with Fundrise. And so the competition was any other publicly traded stock. The competition was not crypto. The competition was T-bills, which at the time were paying 5% a year.
Right.
And I was not swinging for the fences with that borrowed money. I was looking for singles, doubles, and triples, which I think the innovation fund could potentially be a triple.
Right.
Meta at $88 a share would have been a grand slam. And so that's my answer to your question.
Okay, good. Let's recap resources that we discussed. You mentioned Psychology of Money, which is a great book. I think everybody should read. I mentioned Rich Dad Poor Dad by Robert Kiyosaki. Have you read that one?
Rich Dad, Poor Dad? I know of it.
Yeah. I
am really turned off by his public persona, his negative Nancy doom. He's so pessimistic. And,
no.
I can't. It just
totally,
turns me off.
Yeah, he totally is. I'm not saying that he's not. I actually didn't read Rich Dad Poor Dad. I read Rich Dad Poor Dad's Guide to Investments, which is a spinoff of Rich Dad Poor Dad. But I read it specifically because of his point of view. I wanted to see that perspective of, because I felt like he was writing from a place of regret and something that he wished he could have done that he couldn't do, and he just kind of felt he was kind of in that place of everybody. I mean, if you're in the stock market, you're going to have a portfolio of regrets more than you'll have wins, because there's always, I should have stayed. I mean, there's a marijuana stock that I had at 25 cents. It's like $25 now, but I pulled out. You know what I'm saying? So I think that's So I think he's reading from that. You mentioned a few people that have helped you turn the corner with your financial knowledge, not just of Fundrise, but just investments in general. You mentioned the CEO of Fundrise, and then there was another person that you just mentioned.
What's funny is because I am how I am online, I'm blocked on all of his media outlets, but I have a tremendous amount of respect for Joseph Carlson. He's got a couple of YouTube channels. He's active on Twitter. He has a Discord. He has an amazing stock analysis platform called qualtrim.com, which is actually, I think also, you get that when you sign up for his Discord. Because I'm a geriatric millennial, Discord does not work for me very well. It's just way too much noise and not enough signal for me.
Okay.
But that's just me. Call me a boomer if you want. But I have made a ton of money for me,
right,
with publicly traded stocks because of the lessons I've learned from Joseph Carlson. Okay. And so I highly recommend him, even though he's blocked me. All facts are friendly.
Yeah, absolutely.
Who else would I recommend?
That's two. CEO of Fundrise, which is, you said Ben Miller. That's Ben Miller.
Amit. I don't know his last name, but his handle on Twitter is Amit is investing. AMIT is investing is his Twitter username. And he is sort of the, I'm going to use this analogy because of my history, but he's sort of the Joseph Carlson for Palantir, the stock.
Mm-hmm.
No, he better than that. He's sort of the Keith Gill. As Keith Gill is to GameStop, Amit is investing is to Palantir. It's a loose analogy, but I think it holds.
Yeah, it does. It does.
So I'll leave you with those four recommendations, which is, Keith Gill is so entertaining and has been so successful, but Joseph Carlson, Amit is investing, in Ben Miller are the names I'll throw out there.
Nice. And then if this is going to be something that you do on a regular basis, this would probably be the point where you could put your QR code for your invitation to Fundrise. We can put it on the screen.
I sure could.
So people could, if they're interested in investing in Fundrise or getting more information or I looked at my invitation promotion is $25.
Yes, exactly.
Right. So yours is 110.
Well, that's mine.
Yeah.
And nobody else has that. And the reason why is if you have over a certain amount of assets under management, I think it might be $100,000, but I'm not sure about that. Fundrise, you have these tiers. You go 25, 50, and then I think 100 invitation referral vouchers. The upper limit is 100, right? Mm-hmm. And I tried to sweeten that deal by reimbursing people for their minimum initial investment, which is $10. Which is why I say my invitation is worth $110.
Oh, I got you. Yeah, that's right. You're right.
I pay that $10.
Yeah,
because I try to put my money where my mouth is. I try to eat. I show people that I eat my own cooking, right? Well, what do you
Now,
have to say?
is that fiscal 100 invitations per year, or is that total for your account? Because I remember at one point you were saying, hey, go ahead and get it in there because they have to make sure there's enough funds available to honor that invitation, which made it seem like,
yep. What I think you're thinking about, give me a second while I adjust my headset.
yeah.
What I think you're thinking about is Fundrise does not always offer the invitation program.
Okay.
In the 3 years I've been on Fundrise, there was a several month period where they weren't doing it. I don't remember how long that was.
Mm-hmm.
But I think when they are trying to grow their number of users, I'm guessing at this point, but this is what I surmise, they offer the invitation program like many businesses do, which does turn off some people, and some people like to cynically call it a Ponzi scheme because Ponzi schemes do exist, which I understand that. But okay, so that's one thing. The referral program isn't always in effect. And that's what you probably remember me saying, hey, like, go ahead and do this because they might shut it off. Right. I don't know when or why they turn off their invitation program. It's been going strong for a long time.
Okay.
At this point. Now, the other thing that you brought up was,
the minimum was $10. Like you said, hey, just open an account, put the $10 in there, and once I see it, the referral will go through. I was like, okay, no problem. And it's not an instant process. It took I want to say it took me about 3 weeks for that, just for the whole account to get set up in its entirety. Now the $10 went through, I think, within the first week, but then everything else to get set up required some sort of review.
They may have gotten faster with that, but keeping in mind, going back to what we said earlier, private market investing is not as spontaneous as public market investing. And so whatever Fundrise's process is that they have to go through to verify, probably to comply with, I'm going to call it US law, like you are who you say you are, you have a bank account, you have a social security number, they got to set up their processes to send you your tax forms at the end of the year. All that has to be done. But I think what I typically see is it takes about 5 business days from when people set up their account to when they get their $100 in Fundrise flagship fund shares.
That's way better than what it was when I did it.
Okay.
Because I remember it taking a while, but I think we were in a period, if I remember correctly, we were also in the same period of them evaluating distributions as well. So that might have had something. I don't remember. I know it took more than a week, but it does. Either way, I digress. You got any final notes you want to leave with any potential viewers, or let everybody know where they can find you? Obviously, you said Reddit a few times.
You brought up my QR code. So
there we go.
I'll go. So that's the Fundrise one is my invitation, and the other one's my LinkedIn.
There we go.
Thank you for that. I hadn't even thought about doing that on this. The thing I want to leave you with is just my appreciation. I really appreciate and thank you for doing this. It went way better than I even imagined that it could go because you're so good at this. It comes very natural to you, and I appreciate you taking the time to do this.
Absolutely. I do plan on coming back to Pensacola. Don't think that I'm not. I just want you to get your health back up so we can actually get out, because we didn't walk last time. Like we went to your recommendations. For those who don't know, he's a huge foodie. So if you want recommendations, you're in Pensacola and you want to know where to eat, you ask him. I think the 3 restaurants, well, you recommended 5. We went to 3 out of 5, and that one place, I don't think I ate the next day. I just wasn't hungry because we had so much to eat the night before. But then
I love to hear that.
Yeah, and you're real close to the Naval Air Station, so we was able to go on the base and then hang out on the beach where it's not crowded and stuff like that. So if you're ever in Pensacola, you want food advice, don't just find him on Reddit for financial advice. You can find him for food advice as well, and he'll let you know. But we definitely gotta we gotta hook up again before I can come down there. We can actually. Well, we walked around. You left. After looking at the mayor drive-through up and down the streets for whatever he was doing, we actually the next day we went downtown and then kind of walked around for some events. So that was really cool. So I'm glad you're back up in health and you're up in spirits and things are still going the way you're going. Hey, I mean, you're in your money pit, but you're sticking it out. I don't know why, because you can sell it and just, you know, go someplace better. But for whatever reason, you're sticking it out. There's something in there that speaks to our resiliency of what we're just, and it's not so much as it's habitual. It's just, you know, you start something, you want to finish it, but then you want to stay busy, right? You don't want to, a lot of people retire and they're like, oh, I got nothing to do. You just need something to do. You know, you found something that keeps you busy, but then it doesn't keep you so busy that you can't pursue your passions. And it's a great balance that you found. That if anybody, you know, wants to talk to you or I about retirement or the transition, we've been there. You know, there's some scary parts in there. There's definitely, you know, my exodus is different than yours, but everybody's transition is different. But we all experience some of the same emotions and occurrences of just the unknown, because, you know, we learned that when you PCS, you get a sponsor before you even show up. There's somebody that's going to be there to help you acclimate, help you find a place until it's time for you to separate. There's no command that you can contact that says, hey, I need a sponsor on XYZ and stuff like that. So, you know, we always, at least I always want to, you know, reach out and say, hey, you can find me on LinkedIn. You know, my name's on the screen. You just search me. If you got questions about transition or, you know, general finance, you know, reach out. You know, we'll always be there. And then, you know, be on the lookout for the episode. Where can we find the episodes when you post them?
Well, I'm going to upload this to YouTube. I suspect my username on YouTube is the same it is almost everywhere else, which is Fundrise Fan Fam, F-A-M, Fundrise Fan Fam. Big fan of alliteration over here. And the only other username I have is the one on Reddit, because I started it before I found out about Fundrise, which is more average than average on Reddit. But my name is Vincenzo, and yeah, I'll put it on YouTube and definitely send out the link. I couldn't have said it better the way you wrapped everything up. Thank you so much, Chivas. I appreciate you doing this.
Yeah. And if you go to YouTube, make sure you like, subscribe, leave us comments. So because he will read them. I'm telling you, he will find the time, whether he's in his car or he's at home. If you leave a comment and you want to hear something or you want to know more something about something, put it in the comments, because it will definitely be on another episode. So who can we expect for the next one? You mentioned it way earlier. Just give us real quick. Who's episode?
My
5?
OCS buddy Matt. Yep.
Nice. So look forward to it. It's always nice talking with you, my friend.
Nice talking with you too, Chivas. Let me hit end on record here, and don't drop the call. Let me just
go
see
for
if
it.
I can figure out how to end this recording.
Yeah, just hit the button.